Hi everyone, Rebecca here, your BMO mortgage specialist. Today I wanted to talk to you briefly about mortgage penalties. I know it's a dreaded topic for sure, but a really important one these days, especially with the rising interest rates. So, mortgage penalties apply when you break your mortgage, and that can be done two ways. One, by prepaying more on your mortgage than your mortgage lender will allow, or by paying off your mortgage completely. Generally, that happens when you sell the property. So the mortgage penalty is the greater of 3 months interest or what's called the interest rate differential. So 3 months interest is just as it sounds. We take the existing mortgage rate on the mortgage and calculate out what 3 months interest would be on the mortgage amount that's there, and that's what the penalty would be. We then compare that number though to what's called the interest rate differential, or IRD. Now I'm going to read the definition of this to you because it's a little bit more involved, and then I'll break it down for you. So in general, the IRD is the interest for the remaining term of the mortgage on the amount the customer wants to prepay or early renew at a rate of interest equal to the existing interest rate, minus the bank's current posted rate for a fixed rate closed mortgage with a term that is closest in length to the remaining term of the mortgage. If the customer received a discount, the bank will deduct the discount from the current posted rate before calculating the IRD. If the customer borrowed further amounts under the mortgage, the deduction from the current posted rate will also take into account any discount they received at that time. So it's a little complex, and I can show you the formula, but most of you would probably look at it and be like, wow, that looks like a physics lesson. The big thing to remember is that it does compare your current rate to the rates in the market at the time that you want to make that payment, or at the time you want to pay out the mortgage. And right now, with that being a bigger difference, since rates have been so low for so long and now are trending upwards, that difference is causing a lot of larger penalties. For example, I had a client last week that I'm working with, and her penalty is estimated at about $22,000, which sounds super scary and crazy. Now, because it is an existing BMO mortgage we're talking about, we have the option to um, look at possibly porting the mortgage, but more on that tomorrow. Tomorrow's video will be all about that. So tune in, like, subscribe so that you can follow along on that one as well. So basically, the point is that you want to make sure that you understand exactly how your penalties are calculated, and also that you take that into consideration, obviously, when you're making decisions about your mortgage, or decisions to sell or list, or whatever it is you're working with. And of course, if you have questions, I am always here to help. Give me a call, message me below, send me an email, and I would be happy to do that. I'm Rebecca Dick, your BMO mortgage specialist, and I'm here to help.